And among these names, 4 investment banks and brokerages are at this hour now touching their lowest levels in an entire year. Goldman, over the year, I see. Well, I don't know if that's the last. Okay, so
it's pretty close.
Yeah, it's pretty close there. The fresh lows highlight the financial sector's top spot as the worst performer among the 10 biggies, the 10 big S&P sectors this year, down 12% for financials. Charlie.
Well, let's just back up what's pushing a lot of this. And this is where the markets are getting, I think, scary for the average investor. Because the rich average investor, remember, retail is considered everything except is the individual investor, correct? You know that, right? Institutional investors are the big mutual funds and pension funds. What retail is doing right now, the rich retail, they're bailing, and that's why you see those stocks down. And that's the scary part. When the rich guys are getting out, we're talking about people with $10 to $100 million. When they're telling their brokers...
Who normally have done 70-30, 80-20,
right,
80% equity, 70% equity.
When they are telling their brokers, get me out, put me in cash, put me in muni.
Leave the cheese. I want out of the trap.
That's what they're doing right now in droves. And that's what's helping fuel this fire. So what I'm saying with this market, when the sophisticated, rich retail investor starts getting out, you know there's something going on. They, from what I understand, from talking with brokers all day today, they're telling me that their rich retail client is saying, get me out, I'm preparing for a long haul. They think there's going to be either a major correction or a bear market coming this year. We should point out that's why UBS's brokerage arm yesterday posted pretty lousy earnings. And what you're hearing is the same thing coming at Morgan Stanley, coming at Charles Schwab, coming after E-Trade. Those are the major brokers. Goldman Sachs is falling for a lot of reasons, including the fact that they can't proprietary trade anymore. But that's what we have right now. We have a puke.
Here, let me pull up Goldman Sachs.
We have a puke among brokerage stocks. By the way, look at that.
Down 4%.
Yeah. We have a puke among brokerage stocks.
And can I just make this point? You're hearing from a lot of chief investment and chief economic strategists at these brokerages, and there's a Chinese wall, of course.
Sure. Yeah, never really.
They're now saying the R word, recession. More and more of them are putting recession into their daily notes and saying that CEOs around the nation, no matter what industry, are not taking a potential recession into account, and therefore their own businesses may be measurable.
And so what do we tell our viewers? What do you do? Okay, I can't tell you what to do. I can tell you what the rich guys are doing now. They are going into cash and they're going into muni bonds. They like the fact that they get a coupon, which you get out of a bond. It's relatively safe, muni bonds, unless you're buying Detroit, you know, and stuff like that, Puerto Rico, relatively safe. And your money is there when the maturity runs out in 5, 3, 2, 20 years.